Good afternoon. I'm Cammie Abernathy, Dean of the Herbert Wertheim College of Engineering. Thank you for joining us today as we have an exciting presentation planned for you. We're thrilled to have John Avery here with us today to discuss the critical role of AI and its impact on the financial services industry and Fidelity's efforts to create an AI-enabled workforce. John is head of Advanced Data Analytics in the Asset Management Division at Fidelity Investments. Fidelity Investments is a leading provider of investment management, retirement planning, portfolio guidance, brokerage, benefits outsourcing, and other financial products and services to more than 26 million individuals, institutions, and financial intermediaries. In this role, Mr. Avery manages the Advanced Data Analytics team across asset management. As head of Advanced Data Analytics, he also works on the artificial intelligence and big data initiatives across Fidelity. Prior to assuming his current responsibilities, John managed various funds, including Fidelity Fund, the industrial subportfolios only of Fidelity VIP Contra Fund portfolio and Fidelity Balanced Fund, and Fidelity Series All Sector Equity Fund. Previously, he also managed Fidelity Advisor Balanced Fund and co-managed the Fidelity Series All Sector Equity Fund. John also managed both the industrials and materials subportfolios of Fidelity VIP Contra Fund, Fidelity Advisor Growth and Income Fund, Fidelity Advisor Balanced Fund, and Fidelity VIP Balanced Portfolio, Select Banking Portfolio, and Select Chemicals Portfolio. He joined Fidelity as an equity research analyst in 1995. Before joining Fidelity, John was a domestic equity analyst at Putnam Investments and an investment banking associate at Alex. Brown & Sons. He has been in the financial industry since 1986. John earned his Bachelor of Arts degree from Harvard University and his Master of Business Administration degree from the Wharton School at the University of Pennsylvania. With that, I will hand it off to John to begin today's presentation and discussion. John?
Great. Thank you, Dean Abernathy, for inviting me today and for that gracious introduction. So I thought I'd just spend a very quick minute talking a little bit about my background. As you heard, Dean Abernathy introduce me. You're probably wondering why I do not have a master's in computer programming, a high, PhD in math, or a large amount of experience in AI specifically. So as you probably heard, my career at Fidelity has been primarily from the asset management side. I was an equity analyst. I ran several of the large funds and retired from that in 2017. At the time, across all of Fidelity, we were trying to bring AI and the use of data across the entire footprint of our company. We were having a very hard time getting traction in asset management. So Abby Johnson, who's the CEO of Fidelity, asked me that if I would bring my investing expertise into the area of AI to give this effort a kickstart in asset management. Although I do not have extensive background or did not have an extensive background in computer programming or AI specifically at the time, I did, for all intents and purposes, have a PhD in how Fidelity invests, how the company works, and I had very, very deep contacts amongst all the investors there. So in effect, what I was doing was bringing my reputation and my ability to get things done to the process to advance the AI agenda in asset management. So after about 2 months on the job, starting in 2017, I realized that AI is going to be an absolute game changer, not only for investment management, but for finance in general, and probably for most corporations across the world. So Tara, if we can move to the next slide, that would be great. So this is a little survey that I did 2 years ago in the asset management area across the United States. And there are a couple of important things here. You can see that at one point in time, or the point that we did the survey, most of the investors in the United States were really not thinking about using AI in their investment process. It was very new, and frankly, it was a little bit scary to most of the people that had spent most of their career on the fundamental side of the asset management world. However, you can also see that outside of the United States, there were there were a lot more people that were starting to employ this technology. And I guess the main point here is that even though this survey was taken 2 years ago, we're in the process of recreating that survey now. I would bet that the numbers have changed substantially. There is much more talk about using AI in investment management. It's something that's a lot more out in the public arena of asset management across the United States, while the people outside the United States completely have adopted AI and continue to use it. So if we can move to the next slide, Tara. So you can see, so in this slide, what I've attempted to do is talk about how we use AI and big data. So advanced data analytics is kind of the sexy name that they gave my organization to basically encompass anything data. I have a license, in effect, to look at any data that relates to investment management across Fidelity, not only in how we handle our outside shareholders, but also how we run our business. So there are many different things here that it became apparent, and there are things that we're doing to really utilize AI and advanced data across our asset management platform. The first thing that I'd point out to is the blue box on the far left-hand side. AI will be a force multiplier on technological process and advanced data analytics. What we've come to find that by utilizing AI, we get a lot more what I call bang for the buck. We are able to do a lot more data analytics. We are able to help our investors. And when I talk about investors, I talk about our portfolio managers that run stock and bond funds for people that are investing in Fidelity's products, as well as people that people that manage the firm. So the force multiplier is important because as the margins in our business continue to contract, we have to do more with less. And using AI is a perfect way to utilize technology in a very smart way to get more information to the people who are making decisions on buying and selling bonds and stocks. So talent, this is another area. This is kind of in the green box. Newly developing talent in AI and data analytics is being applied to the process of active management. This was an area that I was really kind of unsure of when I joined this effort. Most of the people that I've worked with in the asset management at Fidelity over the last 30 years are very old-fashioned, meaning they are Peter Lynch disciples in the way they do their work. They analyze companies one at a time. They do a lot of work with analysts who spend their entire careers covering certain parts of the markets. For example, we have an analyst that spends all their time doing retail or doing software or doing the oil companies. And as a result of that, you develop these areas of intense expertise across the firm, and people get very, very comfortable with that style of running money. What we've been able to do, and this was the big surprise to me, is to really introduce AI and advanced data methods across the asset management area and have people really, kind of really embrace it. And I originally thought when I took over the role that I would be able to, have a lot of the younger folks in our department, people who had just recently graduated from MBA programs or who had just recently graduated from undergrad programs that generally were more tech savvy than people like myself and others that are kind of that are in the older age spectrum. What was really interesting though was that as we started to do the work and we started to show people the power of AI in the investment process, almost everyone in the department started to embrace the technology. And what was most shocking to me was two of our most senior portfolio managers, and these are both people that run assets well north of $200 billion, and they're by far the oldest people in the department. They embraced what we were doing, became very intellectually curious, and we've been working on extensive projects to help them with their investment process. So again, this happened a lot faster than I thought. I would expected that this would have taken 3 to 5 years to really seed into the culture of Fidelity's asset management world, and it took a lot faster. It was a lot faster than that. And I think what's happened here was just very simple. If you give really smart, motivated investors better tools to do their job, they will embrace them. And the good news is that when we started off utilizing AI and advanced data methods, we took it very slow. We kind of went what we call it the easy wins. We weren't trying to introduce huge, complicated AI algorithms across the department. We were doing very, very small and specific projects just to show people what was possible, and they embraced it. The box in the middle, the olive box, AI can augment the insight of our analysts, fund managers, and sector specialists, is probably one of the most important things that I'm going to talk about today. It's something that I really want people to understand. We are using AI to augment the human, not replace the human. The big joke when I first took over at Fidelity in this role was that I was going to be Darth Vader. I was going to be the Grim Reaper. I was going to be the person that was going to figure out how we could replace all the human talent with technology. And that's clearly not the case. The technology is not ready at this point in time, nor do I expect it to be ready anytime over the next 10 years to run portfolios without any human intervention. Again, the technology is just not there. So what we do in the process of working with AI within asset management is we work closely with the humans and we let the humans run and control the process, but we use the technology in a way to help them without making it a kind of a technology takeover. So again, when I speak about this internally, I'm very, very focused on talking about this augmentation strategy. We are augmenting humans. We are not replacing them. Very important. Once people realized that, the nasty nicknames went away, which was good. So again, augmentation, very, very important. The other thing that's really interesting, and that's in the mustard box, which is to the right of the olive box, is that we have an incredible amount of data inside of Fidelity that we can utilize AI to kind of work with to end up helping our investors. The people that own Fidelity, the Johnson family, have been very interested in technology ever since I started working there, and even prior to that, it was kind of one of their hobbies. So what we've done is we've saved basically every scrap of data inside of the company for the last 35 to 40 years. We know every trade that every portfolio manager has ever made. We know we have every piece of research ever written since 1970, 1.2 million pieces of research inside the firm. But also, if you go to our Fidelity website, we track every click that people make on our website, and we also digitize every phone call that comes into our 1-800-Fidelity number. So we have an incredible amount of data that we can utilize to hopefully help us derive more insights going forward. This is one of what I call one of our secret sauces. This is data that is internal to Fidelity. We will never let it outside the firm. We will never sell it. We will never let anyone outside of Fidelity see it. So it's really one of our key competitive advantages and something that I am very thankful for. The last thing across the right-hand side of this box is multiple use cases for delivering alpha and improving efficiency and productivity are already in place. So when I talk about what AI is capable of doing, I usually talk about this. And it started very simply as we were going to use AI to help people become more productive and more efficient. And then hopefully over time, we would be able to generate alpha. So generate alpha means very simply generating returns above the benchmark. This is the part of the business that you get rewarded for. It's the way you sell more funds. It's the way that you get paid as an asset management professional. It's generating that value add over the benchmark. So again, early on, we worked very, very hard with our analysts and portfolio managers on really the efficiency and productivity side of this. And this was primarily helping them manage the torrent of information that comes at people every day. When I was a portfolio manager 3 or 4 years ago, I would get anywhere between 500 and 1,000 emails every day. I spent 1 hour of my day just managing my emails. I had probably 25 or 30 news feeds coming live at me on my screen, all from various news sources, news wires, etc. There is a tremendous importance in being able to manage information flow as an investor. And through using AI and advanced data analytics, we are able to help people manage that information flow so that instead of getting 1,000 emails or instead of having to process that, we can figure out using AI what the 200 or 100 most important emails are. We can also help narrow your news feeds so that, again, you're only getting the things that you want. So again, these were very easy wins. And very simply stated, the theory that I've always had is if I can improve people's efficiency and productivity, then they will hopefully be able to generate those excellent returns for our shareholders because they will have more time to spend on things that are more valuable other than sitting and deleting emails. So again, efficiency, productivity, that helps generate better results over the long term. And this is where we were able to make a great impact very early on in the process, which drove adoption of the technology across our asset management platform. So Tara, if you could go to the next slide, that would be great. So this is one of my favorite quotes from my early mentor. So I graduated from business school in 1993 and had the opportunity to work with Peter Lynch, who is one of the all-time famous global investors. Peter has written several books. If you have any interest in investing, I strongly recommend One Up on Wall Street, which is where this quote was taken from. And this really goes to the heart and soul of what we did at Fidelity and what we still do at Fidelity, which is looking at stocks, looking at companies one by one. And again, the quote kind of speaks for itself. And basically what it means here is that the person who looks at the most companies, who does the most fundamental research, who investigates the most number of ideas, will usually have pretty good performance. Now, the thing that's really interesting about AI and why I have this slide here is that through using AI, you can basically turn over all the rocks at once, meaning you can see so much more, so much faster than if you had to go through the process of kind of lining all these companies up one at a time and doing the work on them. And as I get further along, I will talk more about how that works. So Tara, the next slide, please. So this is a perfect example of what I talked before about augmentation and goes directly to what Peter Lynch's quote on the last slide talked about. So imagine that you're a global portfolio manager and you have the ability to invest money for your shareholders all over the world. And usually what that means is that you will have an investable universe of roughly 10,000 companies. So as a portfolio manager, you'll have to decide out of the 10,000 companies, which 100 to 200 companies that you'd like to have in your portfolio. This is a massively daunting process and is very, very difficult. All the global investors inside of Fidelity, we probably have about a half dozen, we're really struggling to try to figure out how to evaluate that many stocks at a time. So what we were able to do through a pretty sophisticated algorithm that we wrote was in effect to create what we call a portfolio manager in a box. We were able to take a look at somebody's investing style. And by that, I mean the kind of things they're interested in. Do you like growth companies? Do you like technology companies? Do you like companies that are globally focused versus locally focused? And we were able to create an algorithm that would then sort through as many names as you wanted to put through the algorithm and come up with a much smaller subset of stocks for people to then look at in the human fashion. So again, think about it. You're a portfolio manager. You have a universe of 10,000 stocks. And what we've done is just built a mathematical equation or an algorithm that will take your past investment style, the things that you were really interested in, and reduce that 10,000 stocks to some number. And again, we have the ability to kind of turn the dial and figure out how many stocks that we can do that with. So in this example, we were able to get that 10,000 stock universe down to 300 names. An absolutely enormous productivity enhancement for that portfolio manager. And then with that portfolio manager, what he or she was able to do was then work with a group of analysts inside the firm, and as we say, human refined, meaning they were able to augment the AI screen with human interaction, putting our expertise of our global analysts to work on a much smaller list of stocks. And then ultimately what spits out is in that gray box, which is kind of 35 to 80 names that best fit the portfolio manager's kind of style. So again, you start with 10,000, you narrow it down considerably, then you apply the human expertise that we've developed inside of Fidelity to put a portfolio together. This has been a massive productivity enhancer across all of asset management. We're currently doing this with roughly a dozen portfolio managers in the equities area, and we're now in the process of investigating how we can do this on the bond side of our business as well. So again, perfect example of efficiency and productivity improvement and ultimately driving better investment results for one reason or two reasons. The first being we are giving the portfolio manager more time to do the human work on a smaller universe of stocks. And number two, generally what happens here is new ideas are surfaced. A couple of the portfolio managers have said to me, there are names that show up in the AI screen that I never would have thought would have fit my investment style. And as a result of the algorithm, I'm now finding new sources of stocks to buy that fit my investment process, which ultimately hopefully will add to value accruing to the shareholders. Now, the fascinating thing about this whole process that I just described is that you have to make sure that the portfolio manager that you are working with has some of their own IP. I always joke with our management team that this is a process that makes good portfolio managers better faster, but it will also make bad portfolio managers worse faster, because again, it all is dependent on that model that we built at the beginning, looking at someone's investment process. If that is flawed, then the model won't help you. So again, this is another example of AI working hand in hand with a human augmentation that results in kind of ending up with, person plus machine is better than either. And that's something that we're seeing very much in this work we're doing right now. So again, an example of something that we spent a lot of time on. Maybe Tara, if you could go to the next slide, please. The other thing that we're doing a tremendous amount of work in right now is natural language processing, NLP for short. And basically using NLP as a way for us to understand human language as it's written or spoken. And what we're doing here is we're trying to utilize all that internal data that I told you about. So we have roughly 1.2 million pieces of internal research that has been written since 1970. So every analyst that ever worked at Fidelity across stocks and bonds, everything is loaded into a very easily searchable database. And we're also able to scan through written documents that are filed by the SEC, speeches that CEOs make, anything that's kind of processed into a written document. We can use NLP to analyze that document, and we can come up with things like sentiment scoring. So you can make assumptions about, gee, is the CEO sounding more upbeat about his business than he did 3 months ago? You can measure those things by using NLP. And you can really spend a lot of time evaluating large bodies of text in a very efficient way. If you tried to do this using humans, it would be virtually impossible. You would have to have literally hundreds and hundreds of people that would be reading through documents, noting down kind of word choices, how words are put together, how ideas are strung together, and then trying to fit that back into a bigger picture about what it all means. So this is an area that we are very, very fired up about. We have built a very large document store. We call it Alpha Search, where we have all our internal research. We have all broker research from Wall Street that is also in the database. We have all the company's SEC filings, so annual reports, 10Ks, 10Qs. Every time the company does an analyst meeting, whenever they do an earnings call at the end of each quarter to talk about their financial results, these are all stored and are very easily searchable, and we can study them in many ways. So again, another huge benefit from an efficiency and productivity standpoint, but also it can help give you, information that can aid in the investment process. Is this management team sounding better or worse about the status of their business? What are the key topics that are arising in particular companies? Are we understanding that, for example, 8 years ago that, Amazon Web Services, AWS, was going to become a huge part of Amazon? It was probably a part that many investors didn't understand and didn't know. And by using NLP to analyze all their documents and all their public comments, you could have gotten a handle on that much faster. Ended up being a very big driver of the stock. So again, lots that we can do here. Next page, please, Tara. There's also a side of AI that gets extremely quantitative and very complicated. So we're starting to figure out how to use AI to do things on a math basis that we did not have the ability to 5 years ago. The thing that's interesting about AI is that AI was invented in the 50s, as many of you probably know, and the issue really was around computing power. We did not have the computing power probably until 5 or 6 years ago available on a mass scale to be able to do the computations that were required to analyze massive amounts of data and try to find the interconnections between them. So we're starting to use AI to explore kind of more mathematical topics, and asset allocation is a simple way of saying, if you're an investor, should you be owning more stocks or bonds or cash or oil or gold? And it's, again, very, very mathematical. And because of the computing power and some of the algorithms that are being developed, we're working on this area. I suspect others are as well. But again, where it's something that is very, very important to many of our clients in the 401k business, where we, in effect, manage their asset allocation for them. Next slide, please, Tara. So this is kind of my wrap-up slide, and then I'm going to open it up and be happy to take questions. But I think, the important thing is that AI is here to stay. It's here to stay not only in investment management, but across all the finance areas of the market. I believe that this will be as important to not only asset management and investing, but as important to all businesses as the invention and distribution of the PC was back in the 80s. And I'm not sure if many of you have had conversations with your parents, but prior to having the PC, a lot of the work that businesses had to do in regards to complicated mathematical problems, forecasting, engineering, were done by hand using slide rules and paper and erasers. I remember seeing my dad doing this when I was growing up. So you're now, moving from PCs to the internet. AI will be a huge driver of corporate, global corporatism going forward, because it is one way that you can really hone in on very specific analytics in a way that we haven't been able to do before. So at Fidelity, we continue to try to strive to be there. The biggest thing that the Abby Johnson told me when she offered me this opportunity 3 years ago was, John, don't miss any big trends, which is pretty daunting because you have no idea what the big trends are going to be. This is still very much a white space, meaning there aren't a lot of rules. There's not a lot of things that you can look in the past that will help you inform. So you just have to be out there experimenting with the technology, which we do, and then talking with your business folks inside. So to me, that would be the investors, in order to generate ideas on how we can better use AI and some of the analytics to drive productivity, efficiency, and better results for our shareholders. So my team spends a lot of time talking to people across asset management, not only people who run the business, but people who invest the money. That's where we probably spend about 90% of our time, which is with the investors. We're always out there talking to them and trying to come up with ideas that can help them in their jobs. We spend a lot of time publicizing what we do. We give quarterly presentations where we show projects to the asset management division so that we can generate more discussion and more thought about how we can move forward. And then we're also doing a lot of skills training so that people understand some of the basic constructs of what AI is, but more importantly, what it isn't. So that's also led to a lot of statistical training amongst people that feel like they need some refresher after having been away from their stats and probability classes in graduate school or undergrad for a long period of time. So as I said, we continue to be very, very bullish on this technology. I think that it's absolutely going to be vital to be successful in the asset management space in the future. But again, the way I see the trends evolving across all of AI, whenever companies come in to speak with us about investing in their stocks, inevitably the conversation turns to AI and how they're utilizing AI to run their businesses better, how to gain more insight, and how to maybe even design products faster. So again, I think that everyone that's involved in this, in your program, has absolutely picked the right career. This is going to be an absolutely fascinating and fast-growing area for the foreseeable future. So with that, I will pause and we'll be happy to take questions.
Thank you for that fascinating presentation, John. That was terrific. We're now going to accept questions from the audience, so please put your questions in the chat box. We have a number of them already lined up. I'll start curating them. So the first question is, could you give an estimate on the ROI you have found on AI deployments within Fidelity?
So the question on ROI is an excellent one. This is one that the CFO asks me constantly, and I've been actually doing a lot of research on this lately, because most of the people that in our senior management team look at what I'm doing and say, we think that we can invest a lot more in your team, but please give us some concrete examples and concrete numbers around the returns on some of these projects. So the tricky part here is trying to, do, standard return calculations, and it can be very difficult. You make some huge assumptions that really can be changing the numbers around. But the way I think about it is pretty straightforward on a couple different metrics. Number one, for the investor populace at Fidelity, so the analysts and the portfolio managers, these are people who are very, very highly compensated, and the people who that are very, very good at it and run large assets are very, very highly compensated. So if you can take somebody's efficiency and productivity and improve it by 25 or 30%, think about the math on that for somebody who makes a tremendous amount of money. That really becomes an issue. The other part, and I forgot to mention this in my presentation, is that I've been spending more time over the last year and a half with the people who run our businesses at Fidelity and trying to understand how we can better use AI to better run our businesses. So over the last year or so, we've used NLP quite extensively in our compliance and risk management area to eliminate a lot of our legal headcount. These are areas where you had to have people reading risk documents quite extensively, very boring work, but lawyers are not cheap. So by using NLP, we were able to extract a lot of the risk language that we needed out of filed documents and replace a lot of lawyers with the machine. So again, maybe there is something to my Darth Vader Grim Reaper nickname, but there are many instances across our business operations area, our compliance, where we can use AI and advanced data analytics to drive ROIs. The ROIs generally, if I have the ability to calculate it, I generally don't do things that have anything less than a 35% ROI. And it's just because most of the projects we do will generate ROIs well in excess of 50%. So again, I've been spending more time on this recently as a way to get more resourcing. My team is incredibly busy. I have roughly 100 people that touch AI projects across asset management. That would include people in my team who are the conduits between the business and the technology. We have probably 25 data scientists of varying levels, some very senior people with PhDs that worked at places like Google and Apple. And then we hire undergrads that we then pair with these people to better learn the business. Then we also have a lot of interaction with our technology teams across Fidelity. We have 10,000 people in technology at Fidelity. So that's another area that's just, I have incredible amount of data and I have an incredible amount of tech talent within my organization to draw on. And then I use our quantitative analysts quite extensively as well. So these are people that we call quants that, are very, very adept at doing serious quantitative studies. Generally, when I do a project for somebody in the business, I have a team that has elements of all those people I just described. And depending on it, if it's an NLP project, I'll have a couple of data scientists that are really, really good at NLP. I'll have somebody in the data area or the tech area that's a great database manager. And then I might have somebody in my team who's really good at NLP or knows the portfolio manager or the investor really well. So again, very high ROIs, sometimes a little bit hard to measure. A lot of times I kind of have to talk about it as R&D. But again, if I can go to the most senior investor at Fidelity that runs $180 billion and improve his efficiency by 25 or 30%, everyone nods and says, that's a great idea.
Great. Who has the final say when AI tools point in a different direction? As an example, IBM encountered strong resistance with their medical AI where doctors reached different conclusions.
A very good question. This is something that I was very concerned, I think I mentioned this earlier, very concerned with early on. I thought people would be very, very skeptical. And again, that's why we kind of work with what I call simple AI. Neural networks are something that really doesn't fly within my organization because I need to explain how we arrived at certain results very, very clearly to people. Again, think about, your average portfolio manager investor is highly quantitative or highly linear in the way they think. So you need to be able to start from point A and then end up with the result and show them how you got there. They're not willing to just take your word for it. It's not going to happen. So again, we tried really hard early on to get early wins. We were able to do that. And these were just small projects like, hey, can you figure out how to reduce my email flow by 40%? And by doing that, then they start to trust the process and get more comfortable. And then you can start showing them some more sophisticated works like the one I described, where you take 10,000 stocks and narrow it down to a couple hundred. So there was skepticism, and also I don't require anyone to opt into this. This is all kind of by personal preference. There are some people that I work with in asset management that want nothing to do with my team, but for the most part, the people who are really driven, who are really successful, and who are really quantitatively adept, once they understand what we're doing, and especially understand that we're augmenting, we're not replacing, as long as we can explain to them how we're coming up with what we're coming up with, they generally want to work with us. But we're bringing the organization along slowly, and we have to do a lot of education. So these are some of the ways that you can narrow the skepticism. Other parts of Fidelity that are a lot more consumer facing, we have to be a lot more careful about how we employ the technology, because there are all these issues about biases that, and the whole ethics of AI. We spent an hour in our ethics, AI governance meeting this morning, of which I'm a part, talking about these issues. I don't see a lot of that in my area, but in other parts of Fidelity, it's really, really important. So again, a lot of education, a lot of training, and being able to really explain how we're ending up with the results that we're ending up with.
This next question comes from the Dean of the Warrington College of Business here at the University of Florida, Sabi Mitra. UF is aggressively hiring faculty with a mixed background in finance and AI ML analytics. They have the analytics expertise, but do not have access to the data. What are your thoughts on working together with university faculty who may have deep expertise and interest in quantitative finance?
Great question. We do a lot of work with MIT and with Harvard Business School and with North Carolina State. So we have some pockets of areas where we have partnerships with people. Obviously, we have a process where we have to get NDAs signed. But listen, like this to me is kind of the new world, and I am very intent on finding areas of expertise wherever I can, whether that be working with faculty members at institutions that have expertise in this area, or getting resumes from students. As I said, we hire both undergrads and graduate students and PhDs kind of across the board. And as that one of the reasons why I've been very interested in learning more about the program at Florida is because I've seen what has been put together. So these are things that if you have an interest, if you have faculty members that have an interest in the investment management area that would like to connect with me, I'd be more than happy to facilitate that. And also, if you have really incredible students, both from the AI side or from the quantitative side. So if you have people in your undergraduate or graduate business schools who have a strong interest in this area, either quantitative analytics or AI. So somebody, let's say, that's really interested in markets, but also might have a PhD or a major in computer science and knows how to program, or somebody who has a degree in data science. These are the kind of people that are incredibly hot in the market right now. And frankly, we have a hard time finding good people because it's such a hot area. So I'm always looking for talented people of any background and age to bring through the process of Fidelity.
Well, let me assure you, UF is a great place to come to for talent, John. So we're very proud of our students. So the next question, it is said that in baseball, everything that can happen has already happened. Hence, examining history can help determine the future. Is that somewhat true in global equities? And I guess the assumption is, can you use AI to go back in time and mine prior events to predict future events?
Absolutely. So first, a couple things. Having been a portfolio manager for 27 years, the beauty of the job, the beauty and the problem of the job is that history rhymes, but it never repeats. So every time something happens, you can look back and say, gee, okay, so financial crisis, around COVID, Did it look like what happened in 08 or 09, which maybe looked like what happened in 2000, which may have looked like it happened in the late 70s or the early 70s? Everything rhymes, but it's not exactly the same. And that's the beauty of running, portfolios of any kind of securities, is that you have to be incredibly flexible, because you don't want to get too far into, well, it happened this way, so therefore, in the past, therefore it will happen exactly like it. Now, the beauty of AI is that you can take a huge set of data going back for literally 50 or 60 years, and you kind of input that into an algorithm and see patterns that you probably can't see with your eyes. And frankly, you wouldn't have enough people to be able to do this. So yes, we spend a lot of time looking at past data, particularly in regards to research and to trades. So if I go back and examine the trading history of a portfolio manager, you can build an algorithm that, based on their past trades, will give you an approximation of what their investment style is. And this is something that I described earlier. It's a lot more sophisticated than that, but again, we are using past data to inform the algorithm and build the model. And then, assuming that that person's investment style hasn't changed, that should give you some indications of the kind of things that might work for them going forward. So yes, the business is fascinating because nothing is ever exactly the same, but you can also go back and look at data. And again, I'm thankful every day when I wake up inside Fidelity, because we kept everything. I can go back and look at every trade ever made by every portfolio manager. And you can start building these algorithms that, again, you don't want them to be the end all. You don't want the algorithm to drive the investment decisions, but you can use those algorithms on what's happened in the past to help people narrow the number of companies they're looking at, to maybe see things that they haven't been able to see. I mean, a lot of times we build algorithms with portfolio managers where they'll say, gee, like, I don't think I'm good at X, Y, or Z. Can you help me understand that? And we can really get into the subtleties of some of their investment styles. Like, you should never buy stocks that are up a lot. You should never buy stocks that are down a lot. You should never sell a stock on the day of earnings, because you have a terrible track record of that over history. So again, there are a lot of things that we can utilize data for and AI for that prior to having the computing power were almost impossible to see.
Sort of a related note, where are you looking for new data sources or emerging data sources? A lot of this is based on historical work. Where's the new?
Yeah, that's a great question. So, right now, one of the biggest industries in asset management are people that are selling data. And I probably get 10 emails a day from, fly by night, or maybe not fly by night, companies that are selling data. I would say that at Fidelity, we buy outside data sources maybe 2% of the time. So for every 100 companies we get, maybe we'll buy 1 or 2 data sets, because they go through a very careful vetting process. And a lot of times, data sets that people are selling have only 2 or 3 years of data. That's not enough. We need kind of longer runs of data. But we're always kind of out there beating the bushes, trying to understand what kind of data is available. And then really, I think the trick is taking the outside data, because listen, if it's being sold to everyone in the investment management business, you kind of lose the value of it. But if you can figure out how to combine that data with your own internal proprietary data, that's another area that's very interesting. So, for example, we buy a lot of credit card data because it will show you kind of real-time kind of spending trends. We do some geospatial work to help our ag analysts figure out kind of planting acres, things like that. We do a lot of social media buying, because it's very hard, very time consuming to be scanning and scraping all of these social media websites. But you can learn a lot about consumer companies and tech companies and the reactions that customers have to them. So there are people that will aggregate big data sets for us that we use, but we're generally very, very careful. Most of the stuff out there is junk, but every once in a while you do find something. And then if you can figure out how to combine that with your own proprietary internal data, it's a home run.
You touched on this a little bit, but maybe you could expand on this. This whole concept of responsible AI. What does that mean to you at Fidelity, and how does Fidelity manage its approach to being responsible with the use of AI?
That is a kind of very important topic right now that's getting a lot of press. Yeah, I literally was just in this meeting this morning where, we have an AI ethics governance committee, of which I'm the representative from asset management on. The good news is that a lot of what we do in AI inside asset management, we don't really have to worry about kind of bias. I mean, there's always bias in the data that you have to worry about, but not about ethnic bias or gender bias. But in other parts of Fidelity, the parts that face the consumer, that's a really important part of the business, and you really have to understand how your algorithms will detect will have bias show up in it. There's a lot of reasons for this. Number one, the brand damage we can do is very great. Number two, it's just not right. Like, I mean, to me, kind of coming at it purely from a science standpoint, the algorithm has gender or ethnic bias in it. It's not right. So it's very simple, but we really want to make sure that in our consumer facing parts of the firm that we are very focused on this. We do extensive algorithm reviews, extensive back testing. We have a couple people that are dedicated to basically just doing kind of ethics in AI in our consumer facing businesses. So something we take very seriously. You can see the issues that consumer lending companies have in this area, mortgage companies. They're very profound. And as I said, it's an area that we take seriously. In fact, the meeting today was a precursor to a meeting that we're having with the CEO next week to talk about these issues, because she is very interested in these, because she wants to make sure that we're not doing anything that would kind of cross that line. So very important. And basically what we do is we have a really bunch of smart people that sit around and look at this stuff and really try to take a quantitative approach to it in the back testing and try to understand if we're inherently doing something that's biased.
So this next question is about Fidelity customers. Do you see there ever being an opportunity for your customers to access some of these AI tools, which suggest different kinds of companies and what have you? Or is this something that will be specifically restricted to Fidelity fund managers?
I would say for now it will be restricted, but over time it will absolutely become something that everyone will have access to in the world. I call it the democratization of AI. The algorithms kind of are out there. It's not like we basically work with algorithms that everyone else does. It's kind of how you use your data in those algorithms. But I would say that over time, what I call table stakes is going to keep going up. So, when I first started this job, we had to have credit card data. We had to be able to do these following 4 things. And because the competitors out there are all doing it, you have to keep raising the level of your kind of engagement with AI. I would say that probably within 3 to 5 years that, Fidelity, Schwab, Vanguard will all have access on their websites to this type of analysis.
The next question is about the types of machine learning tools that you're employing. Are you using somewhat standard sort of commercial machine learning tools, or are you conducting research to develop new machine learning tools?
So both. So a lot of the stuff that we use is off the shelf because it's there. It's cutting edge. The beauty about a lot of these algorithms is that people, a lot of times people will develop them and they just put them out there for the world to use. So we have groups of people that are actively working to make sure that we are using the cutting edge. But there are a lot of times that we have to alter algorithms. Basically, in every project, you start with a basic algorithm, most of the times off the shelf, and then you have to customize it to work the data that you're working on. But right now we're really interested in kind of quantum computing and how we might be able to better utilize our algorithms in a quantum computing world. We just at Fidelity said we invest a lot of money in technology with a lot of people. We just have access now to our first quantum computing platform within the company. So we are trying to develop new abilities either on the computational side or on the algorithm side. But for the most part, we start with basic algorithms and then just try to make them work. There's not a lot of kind of crazy, insane stuff that you can do out there. It's really about computing power and time spent.
So how serious is the concern over corruption or malicious intervention to move the market or cause destruction? We've all heard about adversarial AI and spoofing AI. What's the
Um,
concern level on that, and how do you manage it?
it's going to be one of those issues that we're all going to have to learn about together. The technology, like most technologies, can be turned and used for malicious purposes, and I'm sure this will be no exception. So unfortunately, I think it's part of the territory with a new technology. It's a very powerful technology, and the one part that's a little disconcerting to me is that I think from a regulatory perspective, not only in this country, but across the world, we're pretty far behind the technology. That's been kind of the history over the last 35 years because technology is evolving a lot faster than the ability of most regulators to understand it and figure out how to counteract it. So I think that's more of a kind of a technology and society problem. But listen, it's something that's going to be a problem. Bad things will probably continue to happen, hopefully not really, really bad things, but the regulators will always be behind. The SEC has gotten much more interested. So they're the people that the security regulators, they've gotten a lot more interested. And they started asking questions to firms like ours, how we're utilizing AI in the investment process and asking for, kind of, can they come in and take a look? And clearly that's something we will be very cooperative with, mainly because you want to make sure that as a regulator, they understand what the technology is and isn't, so they don't start writing rules that will not make sense.
The whole issue of governance of AI is something that's of great interest across multiple industries. It's of interest to the folks in our law school as well. Do you see there being a sort of overarching AI governance structure, or do you think it will be developed more industry by industry?
I would say it'll be more industry by industry. And again, I think Elon Musk has been the big, kind of proponent of saying, listen, we have to get a handle on this or this is going to cause a lot of trouble. And, he's a really, 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 really smart person. And I think that's starting to get some traction. Having a overall kind of an overriding AI kind of government panel. First of all, I don't know who you'd staff it with. I just don't know the people that would have that level of expertise beyond people like Elon Musk and Sergey Brin and people that you can't get because they're too busy running. Mark Zuckerberg, they're too busy running their companies. I mean, these are the people that really know it. But I think from an industry perspective, that's probably the way you'll have to do it because at least people will understand by industry group. You can get enough expertise together to be able to hopefully regulate it, or not regulate it, but monitor it to make sure there aren't crazy things going on. And then if they are, they can work with whoever probably have to work with Congress to do something here. But having watched Congress question Mark Zuckerberg and some of the other folks lately, Jeff Bezos, I'm not sure that they're the group either. I just don't think they have a really good understanding of this. This is very cutting edge, work for people that didn't grow up with it. Me being one of them.
That is a challenge for the federal government in general, even in a number
Yep.
of the service agencies and what have you. There's a real concern that they won't have enough talent to manage these kinds of programs for the federal government.
And honestly, I think what I hear from my friends in Washington is that whenever they see somebody that's really talented in this world that wants to work for the government, they end up at the NSA. Because that's where they really need to drive this. The DoD, the NSA, and the CIA are kind of where most of the talent lies in AI right now in the government.
The next question is about the who's smarter, AI or the market? It seems to me that with the right volume of data and the right algorithms, AI could be smarter than the market, quote unquote. Would you agree?
Yeah, it would be true if the market was stationary, but the market isn't stationary, and that's really the issue. And listen, we've tried because Abby Johnson, the CEO and owner of our firm, has asked us annually for the last 3 years to see if we can utilize AI to run portfolios. So that's kind of like, can you basically have a non-augmented, no humans, just data, a program that will hopefully allow you to run assets. And we can't get it to work. I mean, and I think a lot of people can't. I don't think anyone has. And for us, it's really about having it work at scale because my division runs 4 trillion in assets, and you might have a couple small hedge funds out there that figure out how to do something very specific in one area of AI. But I think that because the market's always changing, new things are always being introduced into the market that you never thought could have happened. The whole GameStop thing recently was kind of like out of nowhere. You had this incredible volatility that got created, and massive amounts of wealth were created and destroyed. Those are the things that AI can't see because they've never happened before. So again, if the market's never changed and it was the same inputs into the market process all the time, i.e. stationary, you might be able to do it, but I don't see it happening for a while. I'm not saying it will never happen, but it's something that I don't worry about in my career time frame.
Question is about the private equity industry. Do you think AI can be implemented there, even though there's a lack of information like you would find in public companies?
So there are a lot of this is a really good question. There's a lot of private equity firms or a lot of firms that are catering AI to private equity now, especially on building data on non-public companies. So that's a pretty hot area right now. I know there are a lot of people in private equity that are trying to figure out how to utilize AI right now. So I would say that's coming. It will come. There's a lot of really smart people in private equity. They'll figure it out.
Well, you have some satisfied customers entering comments into the chat, and several of them have asked if your highest performing funds are being run by AI.
So they're not being run by AI, but the process of using AI helps the managers run the funds. So this is a really dicey area. I mean, if I were to say to the people that run my firm, like my team is helping get better investment performance in fund X, Y, or Z. When the portfolio manager of fund X, Y, or Z heard that, they would be pretty unhappy. You're dealing with people that have large egos and have been in the business for a while. But what they would agree to is that we're giving them the tools to help them do their job better. So again, that's really it's this augmentation strategy. Person plus machine is better than either. I think we can do better than one person running the fund without it, or we can definitely do better than just having the machine or the technology do it. So again, it's all about making people more efficient, more productive, and surfacing ideas to them that have a better opportunity to outperform the market than not. So again, you got to think about the augmentation piece.
Another question here about if everyone uses AI tools, isn't there a risk that there'll be a lack of diversity in portfolios? That they'll tend to select a particular type of.
Yes and no. I mean, you can see kind of how that happens in the market now, but that's really kind of an investment style issue. So, for example, if you thought about up until 4 months ago, anyone who was a growth momentum investor, meaning I want to buy growth companies that are growing really fast and that are doing well. What does doing well mean? Sales and earnings are growing fast. You could see what happened. The market got extremely narrow. Everyone owned the FANG stocks. And all of a sudden, 4 months ago, when people saw that thought that the global economy would start picking up because COVID was going to end, all those stocks started to underperform. And the last 3 or 4 months, the things that have been outperforming have not been the growth momentum names. They've been deep value names. So banks, oil companies, industrial companies like Caterpillar and John Deere. So no, it's definitely, you have to just remember that things change very, very quickly. And when things get too comfortable and everyone owns the same names like they did in FANG, it worked for a while, and then it doesn't work. And man, when it doesn't work, it is painful. So,
Don, I've saved the best question for last.
Okay.
Would you be interested in starting an internship program with the University of Florida?
I would be interested in absolutely talking to people about that. As I said, I have a really hard time finding people that have the right kind of backgrounds, and that's really kind of a combination of data science, quantitative business experience, statistics. So I told Dean Abernathy when I first started this process that part of the deal would be I would be happy to do this, but I would want to be able to have that conversation with somebody at the University of Florida. So quite selfishly, that's one of the reasons I'm doing this, is because I'm always looking for new avenues of tech prowess and AI prowess. And it's super competitive, and frankly, the schools in the Northeast, it's hard to get people to kind of sign up because everyone wants to work at Google and Apple and Facebook and every new startup. across Silicon Valley. We don't even bother to try to recruit west of the Mississippi because everyone wants to go to Silicon Valley. But as I said before, this is an area that's going to profoundly impact corporate America and finance globally. And I just think that, again, I'm probably preaching to the choir, but everyone that's in this program, you picked a great career because you're going to be in demand for a really, really long time. This is the cutting edge. This is going to go long and hard for the next 30 years. So yes, I will be speaking with the dean about how we can figure out some kind of partnership because I am very interested in that.
Terrific. I think you've got some converts. I've seen a lot of messages coming through the chat saying, I'm ready to sign up. So we'll definitely be in touch with you.
Excellent.
Thank you so much. That was fascinating, John.
Well, again, thank you for your time today. And as I was telling the dean earlier, I'm actually living in Florida this winter. I decided to take the plunge, and I can't. I'm so happy, and now I'm trying to figure out how I can live here 181 days of the year because I just like the vibe in Florida. The people are so much nicer than they are in the Northeast. And obviously the weather, I do not miss at all. So I'll probably end up being a full-time resident at some point in the future.
Terrific. And hopefully you can come visit us face-to-face on campus someday. So
I would love to do that, especially on a Friday in the fall when you have a big game.
We'll do it.
Excellent.
Thanks so much, John. This will conclude today's presentation. Thanks to all of you for attending and participating today. We will be hosting another webinar next month, and we'll be in touch shortly to tell you about the details of the time and date. Thank you so much again for joining us, and go Gators.